Hello, good morning, my dear students. How are you? Okay. Your future is created by what you do today, not tomorrow. Okay. So today's work you have to do today itself. Don't postpone to tomorrow. Today's class we are solving a full-fledged question. It means in that calculation of new ratio will be there, sacrifice ratio will be there, treatment of goodwill is there, revaluation of assets and liabilities, then accumulated profits and losses, and specific reserve. Okay, so this much treatment we have to do in one question. So before going to our this section, if you did not complete anything, that what is the treatment of goodwill and how we are making the revaluation and all, and how we can make the reserves, how we can close the accumulated profits and losses and treatment of specific reserve. If you did not study this topic, you stop the video firstly here, then you just revise one time. Okay, because on the basis of that previous day's class, our today's class is coming. Okay, so I am welcoming you all. Listen carefully and study well. Okay. Question number 50. Let us read the question. X and Y share profits in the ratio of 5:3. Their balance sheet as at 31st March 2020 was as follows. Liability side, creditors, provident funds, workman compensation reserve, then capital of X and Y, then cash at bank, sundry debtors less provision, then stock, fixed assets, profitless accounts. The total of balance sheet both the sides is equal 1,31,800. Then they admit Z into partnership on 1st April 2020 with a 1/8 share in profits. Z brings rupees 20,000 as his capital and 12,000 for goodwill in cash. Z acquires his share entirely from X. Following revaluations are also made. 5 points are there. First one, provident fund is to be increased by 5,000. Debtors are all goods, therefore no provision is required on debtors. Stock includes rupees 3,000 for obsolete items. Creditors are to be paid 1,000 more. Fixed assets are to be valued at 70,000. Now, prepare journal entries, necessary accounts and new balance sheet. Also calculate the new profit sharing ratio. So this is the full question. Full question means what are the things we studied till now? All the things are there. Here calculation of new ratio, then sacrificing ratio, and here goodwill is given, treatment of goodwill. Then here 1 to 5 revaluations are given, so revaluations we have to make. Then here one specific reserve is given, workman compensation reserve. It's a treatment, and regarding this question is silent about its liabilities. Workman compensation reserve, here it is given 5,800. Nothing is mentioned in the question here, so that treatment we studied, the full amount will distribute among the all the partners. Now one accumulated loss is given. This one, profitless accounts. So what are the items we studied in this chapter? Everything is coming in this question. Okay. Then what are the things is asking here? Prepare journal entries. Here journal entries means new partner is bringing 20,000 rupees capital and 12,000 for goodwill. So that entry of capital and bringing the premium. Then that premium we have to distribute among the old partner in sacrificing ratio. That entries. Then after that, revaluations entries. Then one specific reserve is there. Specific reserve we have to distribute among the partner. That is journal entry. And here one profitless account is given. This is a loss. This you have to distribute among the partner. So these all are the journal entries we have to write. Then necessary accounts. The main account is to find out the profit or loss from the revaluations. We have to prepare one revaluation account we have to make. That is one of the main accounts. And another account is capital accounts, because the capital also changing. That is why capital account we have to make. That is the two main accounts. And if we need, we can make a bank account also, because the bank amount also changing, and no need of making other asset account. Debtors are also changing, but no need. Stock also changing, no need to make. Fixed asset also changing, that account no need of making. The main account means revaluation account and capital account. That is the main account. Okay. Then they are asking new balance sheet. New balance sheet means this balance sheet is given on 31st March 2020, and on that day they are taking Z into partnership. That is the next day. Then on the same day after the admission, we have to make a new balance sheet. New balance sheet we have to make after considering all this adjustment. After this all the adjustment, the value of assets and liabilities are changing. So we have to take the new value of assets and liabilities in the new balance sheet after the admission. Okay, these are the questions. And one thing, this one, provident funds. When I told you this treatment of accumulated profits, I told this is not a accumulated profit. Okay, provident fund is a liability. It is not a accumulated profits. It is not a reserve fund. It is a provident funds. Then other things we can see through when I am solving the questions, we can see. Okay, so the journal entries part I will tell after preparing the accounts, then you can understand more. So directly I am going to make, I already made the account, that revaluation account and the capital accounts, and for solving these questions we need at least 15 minutes or 20 minutes we required, and to explain that all we need half an hour. Okay, so I am going to make, I already made the account, I am going to explain that one. First of all, I made revaluation accounts. Before that, here calculation of new ratio is asking. Okay, so that we can see, and you see this sentence, all the partners share is 5:3. They admit Z into partnership with 1/8 share in profits. Z brings 20,000 as capital, and this one, Z acquires his share entirely from X. Okay, Z acquires his share entirely from X. So it means the sacrifice made by X only. New partner's share is 1/8. So the sacrifice will be 1/8. That is made only X. X only sacrifices. We can go to the new ratio part. Okay, firstly the new ratio. Old ratio is written here. Old ratio of X and Y 5:3, and Z's share is 1/8, and the question told 1/8 he is getting only from X. That is why new ratio of X, that will be X old share minus X is giving 1/8, so it is coming 4/8, and Y's share is not changing. The old share of Y is 3/8, that only written here, and the new partner share is 1/8. Denominators are same, all everywhere it is 8. That is why we can write 4:3:1. This is the new profit sharing ratio. Okay, new profit sharing ratio. Then what about the sacrifice ratio? Sacrifice ratio, to calculate the sacrifice ratio we can use this formula, old ratio minus new ratio. But the question is saying this way, X only sacrifices, because Z acquires his shares entirely from X. If you are writing this statement there, then no need of calculating. Okay, sacrifice ratio is 1/8 and X only sacrifice. And when we are passing the entry for goodwill, that goodwill, the full amount of goodwill X only receiving. Okay, why will not get anything? Because goodwill is a treatment we are making through sacrificing ratio, only X only sacrifice, that is why. Okay, now I am going to revaluation accounts. In this question, these points 1 to 5, these all are related to revaluations. Then if asset is increasing, two things are coming here: asset increasing, liability decreasing. Okay, in the revaluation account, this side profit we are taking, that profit will be liability decreasing, asset increasing, and unrecorded assets. This side we are taking asset decreasing, liability increasing, unrecorded liability. Then in this question, Firstly, Provident Fund is to be increased by 5,000. Provident Fund is 10,000. It is increasing means it is a loss. So this 5,000 is the loss. This we are taking in the debit side of revaluation accounts. Okay, to Provident Fund, that is 5,000. Then second item, debtors are all goods. Therefore, no provision is required on debtors. Here debtors 20,000. Outer column we took 19,400 because there was a provision 600. Now question is saying that debtors are all goods. It means this provision is no need. We will get 20,000. So here this liability, provision for doubtful debt is a liability. Liability we can make it 0, means liability is decreasing. Okay, liability decreasing will be profit for the firm. That is why this is taking in the credit side. So here we are writing by provision for doubtful debts. If a provision is decreasing, provision is the liability decreasing, it will be gain for the firm. That is why it is taking this side. Okay, so provision for doubtful debt 600, this amount. Now third one, stock includes 3,000 for obsolete items. In the stock here 25 is there. The meaning of this statement is in the 25,000, 3,000 value of stock became unuseful. So the value we have to decrease. So 3,000 stock we are decreasing, asset decreasing is coming this side. So here we are writing to stock that the loss amount is 3,000. Then creditors are to be paid 1,000 more. The creditors amount is 15,000. So we have to give 16,000. Okay. Afterwards we have to give 16,000. So the creditors value is increasing. Liability increasing will be loss. Here the loss is 1,000. So this is the loss we are taking in the revaluation account debit side to creditors. And another way, creditors, when we are crediting creditors, creditor is a credit balance item. Credit balance item, again we are crediting, it will increase to creditors. Then creditors is increasing. And stock is a debit balance item, and here we credited. So one debit balance item, when we are crediting, it will decrease. You can try that American approach. Okay, last 2-3 days before I taught you American approach. So to decrease the value of asset, we can credit it, and to increase the value of asset, we can debit that asset. Okay, that rule you once again practice, then easily you can understand these things. And one more thing is there. Fixed asset are to be revalued at 70,000. Then this is the new value. Old value is given in the balance sheet. 80 is the old value. New value is 70. So what did you understand from this one? Value of stock is value of fixed asset is increasing or decreasing? Decreasing with 10,000. So asset is decreasing. We have to take on the debit side of revaluation accounts. So it is taken to fixed asset. 10,000 value is decreasing. So that 10,000 we took here. So in the revaluation account, we have to take the profit or loss only, not the new value of asset and liabilities. We have to take only the profit or loss that we are taking. So this much items we took. Then this side we can see this much items are there. Total 19,000 is there. This side and this side only 600 only. So debit side is more. That is why our revaluation account shows profit or loss. Debit side is more. Debit side we took losses. Credit side we are taking income. So here debit side is 19,000 and this side only 600. So it is a loss. Revaluation account shows a loss. Then that if a loss is coming, then this side the balance will come. Okay, and that balance will distribute among the old partner. No, new partner will not get any share. So by loss transferred to X, Y, and in the old ratio 5/8, 3/8 it is distributed. Okay, 18,400 is the loss of revaluation account. Then revaluation account is over. Then we can go to the capital account. Capital account. So the capital account we are starting with the 3 column is required because old partners are 2 and one new partner is coming. That is why 3 column is made. Then the capital account already we studied in fundamental chapter. That is why we have to just revise it. That is enough. And this capital we are starting with the balance sheet amount. In the balance sheet only 2 partners only there. And this we are writing as a balance brought down. So this is 70 and 31 we are taking in the here. By balance brought down 70,000 and 31,000 among the old partner. Then new partner is bringing 20,000. It is given here 20,000 as a capital. So here 20,000 we are taking. Here the writing will be by bank. Then premium for goodwill, he brought a 12,000 for goodwill in cash. So this 12,000 this will distribute among the sacrificing partner. X only sacrifice. That is why here in the column of X it is written, and the journal entry is by premium for goodwill. The entry will be this one. This is debit. Premium for goodwill debit. Amount is written in X column. That is why credit will be X capital account. Entry will be premium for goodwill account debited to X capital account. For the goodwill, this is the second journal entry. Two entries are required. First entry will be bank account debited to premium for goodwill. That will not come here because it is not a bank account, it is a capital account. So that entry will not come. The second entry for premium, that premium we have to distribute among the old partner. So that entry will be premium for goodwill account debited to X capital. So it is coming here 12,000. Full amount is coming here. Then after that, revaluation account we made and we got this much loss, and this loss is coming in the capital account this side. That is why this 11,500, 6,900 I took on the debit side. The journal entry will be, this entries will be same. Okay, the entry will be, what is the journal entry? X capital account debit, Y capital account debit to revaluation. That entry we will get from here also. Okay, so this is the for closing the revaluation account. This is the journal entry. X capital account debit, Y capital account debit to revaluation. That is the amount is coming. Then revaluations that we updated in the capital account. The next thing is here one specific reserve is given. Specific reserve we have to distribute among the old partner in old ratio. So and here no liability is given. That is why the full amount we are distributing among the partner. So that I took the next item. This one, workman compensation reserve. It is a distributed in old ratio. So this much amount they are getting. New partner will not get anything. Old partner. Then one accumulated profit is given in the question, that is a profit loss account. If a profit loss account is given in the asset side, it will be a loss. Loss also we have to distribute among the old partner, and the loss will come in the capital account this side. And entry also we studied earlier. The same entry only we are writing here. Capital account debited to profit loss account. Which capital account? X capital account debit, Y capital account debit to profit loss account. So that amount is coming 1,500. 1900 according to old ratio. So this much entries are okay, everything we work out. Now we have to balance the capital account. Then capital account we are balancing. Then this side is more, that is why this side is added, and from this side this two item is deducted, and the capital of X is coming 72,625. Why also that totaling and balancing that you are knowing, so I am not going to that now. Next thing is we have to make the balance sheet. Okay, we have to make the balance sheet after admission. Then remember this much changes are there in the value of asset and liabilities. That changes also we have to make in the new balance sheet. Now balance sheet. First of all, we can see this asset side. In the question, for making the balance sheet, always you take the old balance sheet which is given the question. We are comparing, and if any changes are there, that changes we can make it. So always on the basis of old balance sheet, we are making new balance sheet. So first of all, cash at the bank. Cash at the bank, here it is given 5,000. But it is changing because new partner is coming with the capital and his share of premium. So he is bringing 20,000 rupees, that much money he is bringing, and he is bringing goodwill also. That is why this 2 will affect this amount. This amount will increase or decrease. When again some money is coming into the business, this will increase. So this amount will be, here we have to show the calculation. 5,000 is the old balance sheet, this much is there, and a new partner is bringing 20,000 as his capital. So 20,000 we can add, and he is bringing his share of premium, that is 12,000. So all this amount we are adding, that much amount will come in the cash at the bank. So it is coming 37. Old balance sheet is given 5,000, but it is changing. The new value will be 37. Then next item, sundry debtors, 20,000 less provision, and we seen earlier no need of provision. So this is 600, no need of writing here. So this amount directly coming the outer column 20,000. So this is 20,000 we are taking in the outer column. Debtors 20,000. Then next item is stock. Value of stock is decreasing 20 minus. Okay, 25 is the amount. 25,000 minus. How much amount decreasing? You see the revaluation account, how much amount is returned, or it is given in the question. In the revaluation account, we have returned 3,000 for stock. Okay, stock you returned 3,000, so that amount we can deduct here. Then next item is a fixed asset. Fixed asset, the value is decreasing by 10,000, so that I deducted here. This is given in the balance sheet. This is 80,000 minus 10,000, 70,000 I took in the outer side. Then liability side. Liability side also, by comparing to all the amounts we are making. So here in the liability side, the first item is a creditors. Creditors amount how much? 15,000. But here changes are there in the revaluation account. Okay, in the revaluation account you see creditors are written here, means value creditors we increased. Okay, so that I added here. So 15,000 plus 1,000, 16,000 is the new value of creditors. Then provident fund also. Provident fund question is saying that this one increased by 5,000. So that also added here. Provident fund old value given in the balance sheet 10,000, and when the admission is happening 5,000 we are increasing, that total amount is coming 15,000. Then we already made the capital account. Then how much balance is coming? This is the new capital amount. We are not taking this one. This is all the capital. So new capital amount we are writing here, capital account X, Y, Z, and their total is coming 1,18,000. Then when we are adding, it will come 1,49,000. This side also will get 1,49,000. Okay, the balance sheet is matching. Okay, so this is the entire question. Now question is asking the journal entry also. So it is better to make the account first and write the journal entry, so that will be easy. So I am not giving the journal entry, I am not writing the journal entry here. You can notice by the time you can pause the video and you can write the journal entries one by one. Okay, so I am reading the question and telling what are the possible journal entries. Then first of all, new partner is bringing his capital and premium for goodwill. One compound journal entry we can write for this this item. Entry will be bank account debit to Z's capital to premium for goodwill. That is the first journal entry. Okay. Then second journal entry will be that the premium we have to distribute among the old partner in sacrificing ratio. So this entry is coming. This entry, premium for goodwill account debited to X capital accounts. This is the second journal entry. Now new partner is a capital brought and premiums for goodwill, that journal entry is over. The next journal entry will be entries related to revaluation accounts. Already we made the revaluation accounts, that is why by seeing the revaluation account we can pass the journal entry, that will be easy. Then here in the debit side 4 items are there. For this all we can write only one compound journal entry we can write for all these items. So the journal entry will be revaluation account debit to provident fund, to stock, to creditors, to fixed assets. Okay, that is the journal entry, and its narration will be value of asset decreases and value of liabilities increases. Okay, two liabilities are increasing, provident fund and creditors, and two assets is decreasing. That is why that one entry is enough. No need of writing individual journal entries. Then after that, this side actually two items are there, but we cannot write one compound entry for this one because this is another things. This is the to close the revaluation account. This entry is coming. So this entry will be we have to write separately. Then next entry will be this one. Here the provision we are cancelling. Okay, to cancel the provision, the entry will be this one. Provision for doubtful debt. Provision for doubtful debt debited to revaluation accounts. This is the journal entry. Provision for doubtful debt account up to revaluation accounts. So here the liability we cancelled. Listen, buy means debiting. When we are debiting liability is a credit balance item. When we are debiting the liability is a cancelling. Okay, So this is okay. And the revaluation account we have to credit when any income is there, when any gain is there. So liability decreasing will be gain. That is why that entry is coming like that. So this entry will be provision for doubtful debt debited to revaluation account, amount 600. Now next entry will be, we have to distribute this amount among the old partners. So the entry will be, here the capital account is written. So capital account will be debited to revaluation account. Capital will be X capital account debit, Y's capital account debit to revaluation. The same entry only this also. Okay. This entry will be same. One entry will go to two account. Revaluation account it is coming, and in the capital account also it is coming. Then this much entries are over. When the new one is bringing the capital, that is over. Premium for goodwill also we transferred. Now this revaluations, this all the entries are over, and this entry also over. This entry also over. It means this also over. Now this two things are remaining. One is that workman compensation reserve, it is given in the liability side of the balance sheet. We have to distribute among the partners. Its journal entry will be workman compensation reserve debited to X capital, Y's capital. Okay. Workman compensation reserve is a credit to balance item. We are debiting to cancel it. That is why by workman compensation. And capital account is creditors. When we are crediting capital account is increasing. That so in both the way this entry is coming. Then accumulated loss is given in the balance sheet asset side, that this is a debit balance item. When it is given in the asset side, it was a debit balance item. We credited it for cancelling it. So two profit loss accounts, and a capital account we debited. The loss when we are distributing among the partner, it will decrease the capital. Okay, so capital account here we debited. X capital account debited, Y's capital account debited to profit loss account. So I hope you understood that logic of writing that journal entry, why that account is debited and why this account is credited. So these all are the journal entries. Okay, so you write the journal entry also. Then this question answer is over. Now we are going to solve question number 51. Okay, 50 we just now we solved, and question number 49. If you understood that question number 50, then 49 easily you can do. So 49 will be homework, and we are going to question number 51. Let us read the question one time. A and B are partners with a capital of 15 lakh and 20 lakh. They shared profits in the ratio of 2:3. On 1st April 2020, they admitted C as a new partner, and the new profit sharing ratio will be 3:3:4. C brings 20,000 as his capital. Their assets apart from cash consisted of the following: fixed asset 20 lakhs, stock 15 lakh, debtors 5 lakh. Then on that day creditors were 4 lakh and general reserve 3 lakh. The following revaluations were made. There was a liability for workman compensation amounting to rupees 50,000. Rupees 20,000 of debtors are barred, and a provision of 5% was to be created for doubtful debt. Expenses debited to the profit and loss accounts includes a sum of 14,000 paid for A's personal expenses. The last year it is happened. The stock includes 40,000 for obsolete items. Fixed assets are to be revalued at 18 lakh. Goodwill of the firm is valued at rupees 4 lakh, and C brings his share of goodwill in cash. Total goodwill of the firm is 4 lakhs. C will no need of bringing 4 lakh by C. C will bring only his share. C's share is the new ratio is given according to that. His share is 4/10. So this amount into 4/10, it will come 1,60,000. 1,60,000 premium he is bringing. Then prepare revaluation accounts, partners capital account, and balance sheet of the new firm. These are the things is asked. Then goodwill's treatment we have to make in sacrificing ratio. Sacrificing ratio you have to calculate. I am not calculating. I already calculated. It is coming. New ratio and old ratio is given. So when we are calculating, it will come 1:2. The sacrificing ratio, it will come 1:2. Sorry, 1:3 is the sacrificing ratio is coming. You check it whether it is coming the same or not. Okay, 1:3 is the sacrificing ratio. Then here, when we are comparing this question with the previous question, one balance sheet was given, but in this question balance sheet is not there. Okay, balance sheet is not given in the question, and they are telling that this one last line of this page, their asset apart from cash consisted of the following, means some cash at the bank is there, the amount is not given. So we need to find out that the cash balance firstly, and their capital is given, and some other asset is given, liability also given, general reserve also given. These all are the balance sheet items. So in the beginning, before making, the question is asking to prepare revaluation account and the capital account and the balance sheet, but before making anything, first of all we have to find out the cash at the bank before admission. Okay, because balance sheet is not given the question, so we have to prepare a balance sheet in the beginning to find out the amount of cash at the bank. Then that I prepared here. In the working note I prepared one balance sheet, and when we are preparing a balance sheet to find out any missing information, that balance sheet is known as memorandum balance sheet. Memorandum balance sheet. Okay, so this is a memorandum balance sheet we are making in working notes. The purpose is, here cash at the bank is some amount is there, it is not given in the question, so we have to find out that one. That is why we are preparing. Then here creditors amount is given 4 lakh, general reserve is given 3 lakh, old partners capital 15 lakh and 20 lakh. This everything is given the question, that I took in the correct place. Okay, here the capital is given, and here creditors amount, the general reserve is given there, that I took in the liability side. Then here fixed asset is given, that I took. Here I followed that order of liquidity. Then cash at the bank is not given in the question. This we are getting as a balancing figure. Means other items we are writing in the correct side, and we are taking the total, and this is coming as the balance. Okay. So fixed asset that is given in the question. This I took here. Fixed asset that is given, took in the correct place. Then here stock is given, stock also taken this much amount. Then debtor also given, debtor is 5 lakh, that everything is taken, and cash at the bank also written, and this is coming as the difference. Difference means, first of all, this side total we took, it is coming 42 lakh, that 42 lakh is written to this side. Then this amount we deducted from this 42, and the cash balance we are getting this one. So you have to make firstly one memorandum balance sheet in working notes to find out this cash at the bank. Okay, when we are making a balance sheet to find out some missing information, that balance sheet name will be memorandum balance sheet. Then I am going to revaluation accounts. Okay, so revaluation accounts. First of all, there was a liability for workman compensation amounting to rupees 50,000. Here workman compensation reserve is not given in the balance sheet. General reserve is given, not a workman compensation reserve. So workman compensation reserve is there, then this liability we are taking from that reserve. But there is no reserve like that. That is why this is a new liability is coming. It is an unrecorded liability. If a liability is increasing or unrecorded liability is there, this you are taking in the revaluation account debit side. Okay, so it is taken in the revaluation account debit side to workman compensation claim, not reserve. Workman compensation claim, or we can write other way, claim for workman compensation. That is the same, otherwise a workman compensation claim, both are the same. So 50,000 is taken in the revaluation account debit side, it is a loss. The next item, rupees 20,000 of debtors are bad, debtors values are decreasing, asset value is decreasing. That is why this 20,000 we can write on the debit side, and the writing will be to debtors. Which asset value is decreasing? That name of the asset we are writing. Debtor we are crediting. Debtor is an asset, it is a debit balance item. We are crediting means the value of debtors are decreasing. So 20,000 bad debt that we are decreasing this way. To debtors is the writing 20,000. Then in the same sentence, it is given and a provision of 5% was to be created for doubtful debts. Okay, provision for doubtful debts. It was not given in the previous balance sheet. Provision for doubtful debt is not there. So it is a unrecorded liability. A new liability is arising. Unrecorded liability we have to take on the debit side of the revaluation account. So that is taken here to provision for doubtful debts. Then the calculation will be, in the previous year we studied that if a bad debt is there, further bad debt is there, that bad debt we have to subtract. Then for the balance debtors we have to create a provision for doubtful debts. Here also we are doing the same. So first of all 20,000 we are deducting from this 5 lakh. We will get a 4 lakh 80. So on 4 lakh 80 we calculated a 5%. It is coming 24,000. Okay. So to find out the provision for doubtful debt amount, we have to subtract firstly this bad debt from debtors. So we are getting 4 lakh 80. It's a 5%. It is coming 24,000 is the provision for doubtful debt. Then this point, third point, expenses debited to the profit and loss account includes a sum of rupees 14,000 paid for A's personal expenses. This is one of the mistake which is done in the previous year. Okay, so in the previous year, in the profit loss account, this much amount is debited, but this was the personal expense of one of the partner. That is why last year's profit is decreased. When it is debited to the profit loss account in the previous year by mistakes, last year's profit is decreased. Okay, so now this we have to cancel. Okay, last year's profit decreased or last year's expense when we are cancelling, it will be this we have to adjust through revaluation account. Okay, this we have to adjust through revaluation account, because the purpose of revaluation is at the time of admission, when the value of assets and liabilities are changing, any profit is coming, that profit we are calculating through revaluation account. So here actually when this expense is cancelling, it will be profit for the firm. Okay, that is why this will come on the credit side of the revaluation account. In the credit side of revaluation account we are taking gain or profit we are taking. Once again, last year the expense which is paid to A, means expense of A will be drawings. By mistakes drawing is taken as the firm's expenses. So when we are cancelling that expenses, profit should increase. So to increase that profit, revaluation account we can credit it. So revaluation account we are crediting. Okay, so it is coming the revaluation account credit side. Then what we have to write means one aspect we got. Revaluation account credit means in the journal entry 2 revaluation will come. Then which account will debit it? Here that will be A's drawings. Okay, A's drawings. This should be, and drawings what you are doing? Drawings we are subtracting from capital. Means when the drawings we are taking in the capital account, the journal entry is capital account debited to drawings. Then here we have to debit the capital account. Okay, we have to debit the capital account to reduce this much amount from A's capital. So the journal entry will be this one. A's capital account debit. A's capital account debit to revaluation. This is the journal entry is coming. In the revaluation account, it is coming in the credit side, because 14,000 expense we are cancelling, it will be gain. That is why to revaluation, that is okay. Now A's capital account we are debiting because it is A's personal expenses. It is A's drawings, not adjusted edge. That is why drawings we are taking in the capital account debit side. That is why we can debit A's capital. So the entry will be A's capital account debited to revaluation. This, not this journal entry. Okay. In this question, journal entries are not asked, but if a journal entries are asking, this will be the entry for that. This is the new things. This point, third one. Now this we can see in the revaluation account. I have written here by A's capital. Then it is the last year's A's expense. 14,000 is written in the credit side of the revaluation account. Then two more items are there. Stock includes 40,000 for obsolete items. So the value, this much value of stock became unuseful. That is why this we can subtract, asset we can subtract, so it is coming in the debit side to stock, that 40,000. Fixed asset are to be revalued 18 lakh. Fixed asset is given here 20 lakhs. The new value revalued at 18. So new value is 18 lakh. So how much loss is there? This is the old value, this is the new value. So difference will be the loss. Okay. So 2 lakh will be loss. That 2 lakh is taken here, and here the writing is a 2 fixed assets. Then revaluation account we can close. We can take the difference, and this side total is coming 3 lakh 34, and this side only 14,000 only there. That is why debit side is more. So it will be loss. Revaluation account shows loss. Loss is coming 3 lakh 20 as the balance, and this we have to distribute among the partner in old ratio. Old ratio is 2:3 it is given. Okay, 2:3 is the old ratio that is distributed in that ratio. Now revaluation account is completed. We are going to capital account. Then capital account, like in the previous question, how we made the same method we are applying here. First of all, balance brought down. In the question, this capital opening balance is given. This only we taken the memorandum balance sheet also. This 15 lakh and 20. This is given, that we are writing here. Okay. Then by bank, new partner, it is given in the last paragraph. Here it is giving. C brings 20 lakh as his capital. This amount we will not take in the memorandum balance sheet. Okay. So this memorandum balance sheet we did not take B's capital. We took A's capital and B's capital, because before C's admission, how much was the cash at bank we have to find out. That is why C's capital you don't take here. Okay. Our purpose is find out the cash at bank before admission. Then so here the balance for A, B, it is given that you are taking, and B is bringing this 20 lakh as his capital. So here the writing will be by bank. Then after that, here goodwill of the firm is given 4 lakh. This 4 lakh, his share is 4 by 10. That is coming 1 lakh 60. New partner's share of goodwill is 1 lakh 60. 1 lakh 60 we have to distribute among the old partner in the sacrifice ratio. Sacrifice ratio you need to calculate. It will come 1:3. So that is written here by premium for goodwill. Then 1:3 it is distributed. Then 40,000 and 1 lakh 20. Total amount is 1 lakh 60. Okay, new partner's share. Then this one, new partner's share of goodwill is 1 lakh 60. Distributed in 1:3 ratio. Now this 2 revaluation I told earlier. No, A is a personal expense taken in the profit loss account last year. When we are correcting that, A is a capital we have to decrease. So it is coming in A's capital. This is 14,000. Then after that, this 2 revaluation is what? This is the loss distributed among the old partner that is taken. Then in the question, this general reserve, it was there in the memorandum balance sheet when we prepared. In the question, general reserve is given 3 lakh. This you have to distribute among the question. This you have to distribute among the partners. In the question, it will give, but question will be silent about its distribution always. Okay. Regarding the accumulated profits, regarding the accumulated losses, question will not say anything to distribute, but we have to distribute this one, because this is the reason. If we are not distributing this general reserve before admission, then later the new partner also will ask a share of this one. So to avoid such a situation, to avoid that dispute and all, this is the profit. General reserve is the profit earned previous years, not distribute among the partner. It is kept separately. It is a part of the profit of previous years only. Who acquired this profit? This profit is acquired by the old partners only. So new partners will not get any share of this one. That is why before the admission, question will be always silent about this item, but we have to distribute among the partners always. Okay. So this we are distributing in the capital account in all ratio. I have written here by general reserve taken. Then all the items are over. Now as usual, how we are doing the balance the same way. We are taking the total. After taking the total, this side we are writing and we are getting the balance. Then here the last balance, here we have to write 2 balance carry down. It is their capital balance. Two balance carried on. A's capital is coming 15 lakh 18,000 and 21 lakh 8,000. C's capital is 20 lakh. Okay, so capital account is over. Now we are going to make a balance sheet after admission. Then here also we already made this memorandum balance sheet, so we can take this as the base, and what are the revaluations we made, its changes we have to update in the new balance sheet. So here in the new balance sheet, here cash at bank, when we prepared the memorandum balance sheet, we got 2 lakh. Okay, that 2 lakh I am writing here, plus new partner brought this 20 lakhs. So 20 lakhs I am adding. New partner brought his share of premium. This amount is 1 lakh 60. So this much amount we are adding. Then we will get this amount 23 lakh 60,000 we will get. Okay. Now debt is it is given 5 lakh is given in the question. 20,000 became bad debts, that is subtracted. Then provision also subtracted, minus provision we got 24,000. Earlier I told how 24 is coming. So this is both we are subtracting from 5 lakh. So we will get 4 lakh 56,000. This is the debtors after the revaluation. Now stock, from stock 40,000, that obsolete item we are subtracting, and this is the new value. Fixed asset also it is given 18 lakh is given. This is the new value it is given, and this old value 20 lakh is given. So we understood that 2 lakh is the value is decreasing. So we showed the calculation here, and 18 lakh. So when you are making the balance sheet, we have to show the correct value we have to take. On the date of balance sheet, what is the value of asset and liabilities, this we are taking. Okay. So here this is the asset side and this is the liability side. Then in the liability side, creditors are given in the question. It is not changing, so same amount is taken here, 4 lakh. Then workman compensation claim, this we made through revaluation. It is an unrecorded liability, so this we have to write here 50,000. Then capital accounts, this is the balance of capital account. Okay, don't take this opening capital, that is changed because of this much transactions. So this is the capital amount that we are writing. Then we are taking the total, and we will get the answer 60 lakh 76,000. This is the total of this balance sheet we are getting, and this answer is matching with our textbook answer. Okay, so it is not difficult. You remember, you have to study this one by one. Means one by one means calculation of new ratio and sacrificing ratio, then treatment of goodwill, then revaluations, treatment of accumulated profits and losses, then specific reserve. Okay, this much you study one by one clearly, then only this type of big questions we can solve. Then one more question will be homework. I will explain that, then you do this at your home. Okay, and try to get the answer also. It is like the previous question only. This is the question 52. X, Y and Z are equal partners with a capital of 1,50,000, 1,75,000 and 2 lakh respectively. All the partners are 3. Okay, and their capital is given this much. They agree to, and they are equal partners, so the old ratio is 1:1:1. They agree to admit W into equal partnership upon payment in cash of rupees 1,50,000 for 1/4 share of goodwill, and rupees 1,80,000 as his capital. His capital amount is 1,80,000, and they agree to admit W into equal partnership upon payment in cash of rupees 1,50,000 for 1/4 share. Means his share of goodwill is 1,50,000. It is not the total amount of goodwill. He is bringing this much cash as his goodwill. So this is in the previous question. Here it is given goodwill of the firm is given 4 lakh. That is why with his share we multiplied, we got 1,60,000 here. But in this question 1,50,000 is his share, that we can understand. Then 1,80,000 is a capital. Then both the sums to be remain in the business. its meaning is that goodwill, goodwill he is bringing 1,50,000. This is a not withdrawing by the old partner. If it is not given, then also the same meaning only there. Both the sum to remain in the business means the goodwill they are not withdrawing. Previous question also that goodwill did not withdraw. The liabilities of the old firm amount rupees 3 lakh, and the asset apart from cash consists of motors 1,20,000, furniture 40,000, stock 2,65,000, debtors 3,78,000. This question also one balance sheet is not given in the beginning. Okay, beginning means at the time of admission the balance sheet is not given, and here it is saying that the asset apart from cash. So except cash, all the asset is given in the question. So we have to make a memorandum balance sheet. Okay, we have to make a memorandum balance sheet to find out the what is the cash at the bank. Cash at the bank, how much we will get. And in the question, in the answer it is given, their hint is given, it is coming 22,000. Okay, so you can make it and check it. You can check it. When you are making a memorandum balance sheet, new partner's capital will not come. New partner's premium, how much is bringing, it will not come, because we are making memorandum balance sheet before his admission. Now, next paragraph. The motors and furniture were revalued at 95,000 and 38,000 respectively. This we have to do through revaluations. What is happening, increasing or decreasing? Here a motor and furniture, motors value 95. Here it is given 1,20,000. So it is decreasing, loss, debit side of revaluation accounts. Furniture 38, and here furniture is 40. 2,000 is decreasing. So this is also coming on the debit side. So both are coming in the debit side only. So revaluation account will show a loss. Then draft journal entries necessary to give effect to the above arrangement and show the initial balance sheet of the new firm. First of all, you have to make a memorandum balance sheet to get the cash balance. Then after that, the journal entries will be. And here, what about the sacrifice ratio? Here, older ratio is given 1:1:1, and the new ratio will be 4 partners are there. Then 1:1:1:1. Okay, and sacrificing ratio will be same as old ratio only. That will be 1:1:1 among the X, Y, Z. This you can calculate, and you will get the sacrifice ratio is 1:1:1 among X, Y, Z. Then journal entries I am telling. First journal entry you write for bringing the capital and premium. Okay, that is the first journal entry. And the second journal entry, this premium is distributing among the 3 partners equally, because the sacrifice ratio is equal. Then 50,000 each will come. That is the second journal entry. And the third journal entry for revalue the asset. This is 2 asset. One compound entry we can make it to reduce the value of motors and furniture. That is the third journal entry. Then revaluations loss we have to transfer. That is the fourth journal entry. Okay. So these are the journal entries are coming. There is no other journal entries. Then here any cumulative profit is there or not? Equal partners this much. Goodwill is given. Their liabilities of the old firm is 3 lakh. Okay. No accumulated profit. There is no accumulated loss. So journal entries are over. 4 journal entries is enough. 1 entry for bringing the capital and the premium for goodwill. Next entry for distributing the premium among the partner. And the third journal entry to reduce the value of furniture and motor. And the fourth journal entry, revaluations loss we have to distribute among the partner. So that are the 4 journal entries. Then they are asking to prepare the balance sheet. So before preparing the balance sheet, you have to find out the capital. Okay, capital means this amount, their premium you have to add, and their share of loss you have to subtract for the old partner. And for the new partner, this is his capital. So capital amount you can find out roughly. No need of making the capital account. If you want, you can make, no problem. That will be in the working note. Then balance sheet they are asking. Okay, balance sheet also you can make a cash balance you are getting from the old balance sheet. Means memorandum balance sheet 22 you are getting. That plus new partner bringing 1,80,000 and 1,50,000. Both you add, that will be cash balance. Then the asset, in the asset motor and furniture value you take the new figure. Debtors will be the same, stock will be same, and in the liability side one creditor you take, and a new value of capital you take in the liability side, then you will get the same answer. Okay, do it seriously.